Okay, so the scalping, we don't forget about everything else that we've learned, the entry model, everything that I've taught you with structure and the demand and supply and candle wicks, all of this, right? All we're going to do now, we're just going to go deeper into it, into a more advanced level, where I'm going to show you ways of entering without having to possibly wait for even a 1 minute break of structure.
All right.
Okay, so basically, can you see, is my screen sharing the 1 hour Euro USD?
Yeah.
Okay, so for example, right, like I caught this trade. Let me get that way. I caught this trade here, there. Let me put buy. Okay, so I caught this buy here. Okay, for example, but if we look on the 1 minute time frame, let's go back down to here. I think my trade was from somewhere like here. Again, I'm going to just show you why and how I do that, because it's not something that I teach. Obviously, as you know, I don't teach things that are more advanced than the entry model, because it will just confuse people too much if I try to squeeze it all in. Plus, you know, it's not worth what I'm charging, if I'm honest with you, for to get in the group, and the entry model should make everybody profitable. This is just pushing things to another level now, and because you're struggling a little bit. It's another reason I've accepted to do this because I didn't really want to teach this to anybody, right? But
yeah,
because I know you're struggling with the entry model. Every trader is got a style of trading. Traders are different, right? So maybe you just haven't found the perfect style that suits your personality and how you want to trade. Okay, so hopefully after today, or not necessarily after today, but after we do our 4 sessions, I'm hoping that, you know, you'll have a little bit more clarity with what suits you, because either the entry model is going to work, or if it doesn't, the only other option we've got is to look for entries the way I'm going to teach you today.
all right.
Okay, mate, so let me show you the first thing, right? The indicators. So let's just pull the chart back to anywhere. Let's go back to, right, let's cut the chart. We've already cut it. What day is this? 7. Let's cut it back to a day here. So let's first find, okay, so this is what I want you to start doing, right? Because this is what I do, these things in my head automatically, right? Because I've been doing it for a while. Okay, but what you want to do is, you see this indicator here? Okay,
Yeah.
First of all, let's go back to Frankfurt, 7 o'clock, okay? So 7 o'clock here. 7. Okay, so you see 7 there, right? Let's mark that as Frankfurt open. Okay. So this is the start of our trading day here. Okay, obviously, however it is for you, you do it. Now, can you see this indicator here? Sorry, not this one. This one here.
Yeah.
Fib time zone. Okay, and it'll be in your list. Fib retracement, Fib time zone. See here?
Yep.
Okay, and do you understand, if you put a star on it, then it saves it to your menu here?
Yep.
Yeah, you understand that, yeah? Okay, so save this one. save this one into your menu, select it, and then you want to draw 7 o'clock, okay, your trading time, and you want to drag it. I'm going to show you all my settings, so then it's up to you if you want to set it the same, okay? So the first one you're doing, you're going to do hour to hour. So it's 7 till 8. Click on it. Now I've saved, you see, I've got 1 hour saved on this. I saved 1 hour, and you can see now, there's all my 1 hours, okay? So if, I'm just going to show you my options, exactly how I've got everything. So, you know, then you can look back and you can set yours the same. So there we go. Okay, just hours 1, 2, 3, 4, 5, 6, up to whatever it goes, 10. And then I've got labels on here. The labels are basically these, the numbers counting. So you can see which hour you're in, even though you don't need to, because you've got the hours obviously changing from 9 to 10, whatever. But I've just got 1, 2, 3. I've left those labels on, and that's it. Okay. Then I lock them in place. And I'd say lock them in place, because if you're drawing on your chart, you know, it's not gonna move them.
Yep.
Okay, so there's your hours. We'll come on to all this in a minute, okay? You're going to do this fib thing 3 times. Okay, so again, we go back to the 7. This time you're going to drag it to 7:30, like this. Click on it, and then you're going to save it on a different profile. I've got red, 30 minutes, okay? We click on it, and then we lock it in place again. Okay, you can see my red lines every half hour of the hour, okay? Now, let's have a look on my, okay. And these are the settings for this one. Okay, 1, 3, 5, 7, 9, 11, 13, 15, 17, 19. Okay, nothing else. Use one color, nothing else. Obviously, you don't have to choose my colors. You can use whatever you want, but this is just how I do it. Okay, so we've got them locked in place. Okay, now we've got an hour, we've got the half hour. One more. We're going to again start at 7, and this one's going to be up to 45. Okay.
Yep.
Click on it there. This one's green, 45, and we lock it in place. Settings for this one. Oops. Okay, here we go. So we've got 1, 2. I won't read them all. You can see we set them like this, and again, we don't need any labels or anything. We press OK. Locked in place. Okay, now, and that's coming down now to our timing when we trade. Okay, now this isn't like a 100% thing you have to do when you trade. Okay, you don't have to trade within my kill zone, right? But if you just focus, and I want you to focus on only taking setups that are in this, let me annotate. Nobody will teach you this, right? This is not anything that anybody's ever taught me. This is something that I've been using myself from all my studies, whatever. Okay, so you can see the red line here, okay? And you can see the hour line here. Okay, so basically, when I trade, I take a scalp. For me, I do trade inside here, right? But that's for me. But I also know if I'm taking a trade in the first half hour of an hour candle, there's a smaller probability of a reaction for price to do this. Okay. So my trades, a lot of my trades, right, especially my scalps, will be in the last half hour of the 1 hour candle of this. This is the 1 hour. Okay, and you know, I've just picked a random place on the chart here, right, just to show you like how good this can be. Okay, so you can see, right, this is the last 15 minutes of the 1 hour candle, right?
Yep.
Okay, so and you can see price reversed, right? Okay, and we're in a downtrend. You got to remember which way you want to trade, right? And follow the trend. The trend's your friend and all this. Okay, so we're just going to be looking for continuations. Okay, so we look on this next hour here. Okay, we didn't get a tap here. Okay, so we would have wanted price to pull back up here, sweep this liquidity, come up here, and then we would have looked for the trade, right? Would I have taken this trade still? Yes, I personally would have still traded that, right? But that's because I'm used to trading this way, and we can see this as an entry model anyway. If we just clear this up, right, we can see there's inducement there. We can see that's an entry model for continuation anyway. Okay, but this
isn't the point of interest isn't this point of interest quite big actually?
Which one, mate? You can write on chart. This one here.
Yeah, isn't it supposed to be like this?
No, this is on the 5-minute charts, remember?
Okay.
So this might be let me go to 1 minute. Yeah, you can see here, this is the zone here. You see the candle,
Right.
buy candle.
All right.
Yeah, because like we were just saying there, and again, right, you can go down to 1 minute chat, because this is what I was saying, right? This is the kill zone where you want to see the price come to. We got lots of inducement here. Okay, but we would have preferably wanted price to come here at the end of the 1 hour candle. We know the 1 hour candle finishes here. Okay, now what I'm showing you here is for the 1 hour candle, right? But this is us going right down to get our trades, to get our scalps, right? But this also is something that you want to consider and look at with the 4 hour candle as well. Okay, so the last 2 hours of the 4 hour candle is where, you know, you'll possibly be going, right, we've got a big, let's say you've got a big 4 hour candle. Okay, is that 4 hour candle going to keep on moving and get really, really big? And then this is what we're going to come on to in the next part of this lesson this morning, is extended candles. Okay, because this is another key thing, and this is how I managed to get the snipes, if you like, from places like this. This is where because just for example, if we've got a big candle on 1 hour, let's just say we've got a 1 hour candle like this, and it sweeps liquidity, and let's say the candle's there, and we're in our kill zone, then I am very, very confident, right, that candle will not finish with a high like this.
Yep.
Yeah, the chances is, right, if you're in the last 15 and you get this candle, the candle's going to finish like this. Okay, and you're in from here, and this is how I scalp, right? And this is why I'm telling you also that it's worth keeping a hold of a scalp, because this wick can then turn into this. So the way I trade, the way I take them, right, I'm basically scalping combined with SMC with everything that I teach, the entry model and everything. But if I start telling you guys, and if I start posting in my case studies, you know, I've got an entry from here, then all my students are going to turn to me and say, hang on, how did you get in there? You haven't got two 1 minute breaks of structure, and you haven't got a 5 minute breaks of structure. Okay, it's true. That's why I don't post them to you guys, because it's not what I teach as part of the you know, the entry model course that I, you know, that I teach you guys. This is this is something totally different. You know, if guys want to go on to like yourself to do more advanced entries, then you know, then here we are. So right. Okay then. So let's go back to 5 minutes, okay? Because it's easier to see this. Okay, and again, right, when I'm trading, I don't always leave my charts on the 1 minute time frame. And this is another thing, right? You don't have to be on your chart all the time. It'll be better now. You'll see, right? Because you can start practicing this after today. So let's say you're bored of looking on the screen and you don't want to be on the screen all the time, right?
Yeah.
Then for this time here, this is 30 minutes, right? You can just go and do what you want. Okay, let's say you just want to trade half a day, 3 hours. Okay, then okay, you can either stay on it for the full 3 hours, or you can, you know, be doing stuff in your house or whatever, and then just come and check the charts for the last half hour here and just see if there's any trades happening. And again, you know, even though we wanted to trade in here and it didn't happen, price didn't come, what you get is price dropping. But you can see when price drops, right? Let me move that. Okay, so within this, it did sweep this liquidity and it's in this zone again. And then price does make a big reaction, but then it comes back up. But now you've got an entry model. Let's say you didn't want to take this trade here because it hasn't got into your last half hour zone. You go down to 1 minute time frame, and what you've got here, you're in your zone here. Okay, and this will be what we call our RBR, right?
Yeah.
Because we've got this POI here, we reacted, and then price rejects and comes back, tags it, and then it runs to take your target there for your first partials, right? Take trade to the lows. Okay, so you can see it here, in your zone here, in your zone here, in your zone there, but we didn't get to somewhere that we wanted to. When you get used to this, right, you will be able to take these trades for scalps. And the reason you can is because it takes liquidity here. Okay, but these ones would be higher risk. Okay, so I would say to you, focus on the ones that come to the extremes every time. Excuse me. Right, let's have a look at the next one. Nothing here. The price broke this down here. Here's your zone. So you get a liquidity sweep, and then, you know, it's up to you if you want to go counter trend, right? But you can see the timing, okay? Every time the timing pushes back up. It all makes sense. If you mark your charts with all of this, how I've told you, you will start to see how price reacts at certain times, and how trade setups become higher probability if you focus on the last half of, you know, the last half hour of the hour, also the last half of the 15 minutes, the last half of the 5 minutes. Okay.
Yes.
Okay, and what I mean by the last half is when you take, we'll get onto this when we come when we come on to our extended candles. But what I mean is, let's say we had the 1 hour candle scenario, the 1 hour candle scenario like this, and so the last half, it would need to be in the last half hour, right, of this candle is when you start looking, okay, it's really big 1 hour candle now. Within the last half hour, you go down to the last 15 minutes. You can have a look on the 15 minutes chart, let's say you've got 15-minute candle that is overextended, and let's say you need that 15-minute candle to be basically to be well into the 15 minutes. If the candle is like really big and it's only been running for 3 minutes, you know that there's still 12 minutes remaining on that candle.
Yep.
Okay, so you don't want to be trading it, because you know there's you want to be in the 7.5 minutes onwards of a 15-minute candle, and the same for a 5-minute candle. Okay, you want at least 2.5 minutes to have gone into this candle here before you start thinking, right, it's gonna close with a wick. Okay. Is that
Okay.
am I complicating you, or are you getting that?
It is really advanced and slightly confusing, but
Yeah.
I'm getting it.
You'll get it. You'll get it, because we're going to come on to this is the next part of what I'm going to be showing you, and then we'll go through some examples, and you know, and hopefully, like I say, this is why we've got a big package now, right? We've got four good sessions that we're going to just drill this, and we're going to drill everything, right? We're going to still look at entry models, and we're going to look at seconds and all kinds of things, and we're also going to move on to scaling into positions and the best way to do it, you know, with risk or whatever. Okay, mate. Let me clear that. Okay, excuse me. So let's move through this session, right, and see if there's any more examples for us. Okay, so we've got this one here. There's the kill zone there. There's the kill zone here, and this one that pushed it up. There's a kill zone here. Okay, and missed there. So we would have caught this trade, right? This would have been a trade we would have taken. This would have been a trade that we would have taken. So we'd have got that, and we'd have got this, right? By trading this method. Okay, now, yeah. So there's two trades, right? 1, 2. Now we've got price coming into this kill zone again here. Comes down, sweeps. Okay, so it's continuation. So on
the Q zone is the last 15 minutes
it's
of the 1 hour.
It's basically the last half hour of the 1 hour.
Yeah, okay.
Okay, but it's better when it comes to the last 15 minutes. It's even stronger, right? That's why you've got these two zones marked up. Okay, so it's stronger when you come into this area here. Okay, because price will often what you'll get happening, right? You'll get candles reversing at the end of the hour. You know, they'll come up and then they'll continue down. Even when you've got really strong candles pushing up, they're the best ones. They're the best ones to trade. So if you're coming down like this, and then you have this really strong candle pushing up into this hour, sweeping liquidity, then you can just click on that, trade it, and be confident that it's going to go down and break structure.
What's the stop loss and entry? Like, what's the stop loss and take profit?
Well, we'll come on to these, because your take profits, right, is always going to be, if you've got to look at the higher time frame. I mean, I can't tell you where to take profit. If I've got a high time frame bias that, let's say we're in a 4 hour supply here, okay, and I know that this could potentially move out of this screen, right, really fall, then I'm not going to close my trade here for TP, okay, because it's trending down and its order flows down. It's just going down. What I might do is take partials here. maybe I'll close half of it or 50% or maybe 25%. And sometimes I don't touch them, because if I'm reacting from a 4-hour supply, I know a lot of people say, oh, pay yourself because you're going here. But if your reading structure is good, then I'd be pissed off if I closed money here and then watch it go flying down because it's reacting from a 4-hour supply. Are you with me?
Yeah.
Okay, so taking profits is totally down to you, but we don't want to be taking any partials. Okay, within this one, we don't want to be taking any partials until we break this would be a weak low. Okay, that's a weak low. Okay?
Yeah.
Because you've broken this structure, you didn't break this one, so this one becomes strong. Okay, and this one becomes a weak until this one gets broken. And if this was to do this, then this becomes a strong, and then are you with me?
Yeah.
And then when it pulls back, then this would then be weak. But this is another thing, right? You always have to look at the other time frames. I mean, this could be a strong on here and here on the 5-minute time frame, but you might be in a 4-hour strong, a 4-hour level here, which is strong, right? So if you get, let's say, 4-hour strong there, and let's say you've got price doing this on 15 minutes. Now, this is a 15 minutes week, right? But you know that you're in a 4-hour strong here. So you've got to consider this, right? Because what you need to look for then is possibly this weak high to change into being a strong high, because it doesn't break, because you've got you've got alignment with the higher time frame.
All right.
Okay, are you with me?
Yep.
And then, so if we look then for an entry model or timing or whatever, and then we trade this with the 4-hour, and maybe the 4-hour week is down here, way under this. Okay, so this is your, let's just say this is like a 1-hour week, and then you've got your 4-hour week there. If you're reacting from a 4-hour extreme level, then follow it, leave it. And this is this is somewhere that traders step up another level. If you can teach yourself to respect the high time frame structure and hold your trades to go and take the new 4-hour low, week low, and then wait for another retracement, and then goes and does the same, but you can get your entries on 5 minutes or 1 minute like these, then you ask the question, where do we take profit? Do you want to close this trade here for 30 pips when the 4-hour one here is going to be for, I don't know, 250 pips? Do you know what I mean?
Yeah.
Okay. So always, focus on these, because I know in our last session you said that you didn't really focus too much on the high time frame stuff, did you?
Yeah. Didn't.
No. So again, it's so important, because this is where you can make some serious money, is when you learn to read the high time frame structures and then just follow it. Just follow it. If we have a look on let's move this away for a minute. If we go to Let me move this. If we have a look on the daily structure here, right? Now, let's have a look on what happened last week. We've got bearish move, right? All of this bearish candles. Okay, and this is another thing. We're going to come on to how best to read the high time frame stuff as well. It's part of our 4 sessions that we're going to have, right? We're going to be going over things like this over and over because, especially with you, because like I say, like you've told me, you know, that you didn't focus on the high time frame stuff too much, but it's so important, right? And as you know, I've posted in the group many times over the last 2 weeks that I'm going to be holding a big chunk of my longs from now on because I'm expecting price to give us a possible. Well, it did. It came up. This is your daily structure, right? This is your first bull candle from this down move here. Okay, so this high becomes a daily strong. You see DS there?
Yeah.
Okay, so that is a daily strong level. So what we need is price a daily candle to close outside of this daily strong, and then if it pulls back, this would then become a daily weak. Okay, and you can see down here, I've got daily and weekly weak. Okay, this low here is a daily and a weekly candle weak because trend is down and it hasn't broken the daily or the weekly strong. The weekly strong's up here. Okay, this is the weekly swing, if you like, or the daily swing, weekly. But the structure inside, the only one we've got is this daily. And as you can see, right, we obviously had a push up all the way up to here. And this would have been your daily low. And then price has respected this high. And then it's pushed down and it broke this daily weak low there. You with me?
Yep.
Yeah.
Okay.
So the structure is basically this. Okay. Now, if you're in the shorts from here and you know that the daily weak low is there, then hold it. Hold it to take the daily weak low. And you see how price reacted when it broke it. Okay. It's broken it with momentum, really strong. This was the news event on the euro. When was it? Was it Wednesday, Thursday? I can't remember. But anyway, it was a massive move. And I didn't get in. It missed my entry.
Yeah.
But that's what happens, right? But what we can also see here, I always tell you guys to keep an eye on 50% of wicks, right?
Yep.
Okay, so we can see here, and to confluence with it. Basically, it's a big entry model. Okay, so you've got a push down, you've got an inducement now, and then price comes, takes the inducement, confluence with a 50% of this wick, highs holding, okay, and then it goes. Okay, so you've got that, our entry model.
Yep.
Basically this, yeah. And then goes down. Okay, and this is where candle study or price action study is so important because, you know, I know you can spot an entry model on the 1 minute time frame and the 15-minute time frame, right? But
yeah.
If I would have asked you, is this an entry model in here? You probably would have said no, right?
Yeah.
It's not easy to see until you basically you have to look for it. Maybe you wouldn't have even looked for an entry model on the daily in this way because, like I said, because you don't concentrate on the higher time frame stuff too much. Maybe you would have looked on the daily chart and just gone, I don't really see anything other than it's down at the extreme. But these are the things you got to look at, and once you learn to train your eyes to spot this everywhere, you'll start seeing them on all time frames. Okay, and obviously when we see this on all time frames, we go into this on the small time frame, and then we look for our entries. Okay, then let me just have a swig of water, mate. Okay, then let's go back to scalping. Right then, this is what I look at when I'm scalping. I just want to say to you, right, when you're scalping anything else other than my pair that I trade all the time is Euro USD. You know that, right? That's my baby.
Yep.
I have this setup, right, where's 8? Windows 8. Okay. There's euro, and here's British pound. Okay. Do you remember what I taught you with looking for diversions as well, right?
Yep.
Okay. So you can use something, an indicator, to look for diversions if you can't see them naturally, right? Okay. Let me go back to 6. Okay, so 6. So basically I have this, right? And I have, because I've got 4 screens, I've got another screen, and that's why this is on 6, because my other screen will have GU, GBP, USD, and Euro USD split into 2, because they're the 2 pairs that I really focus on. What you want to look for, I'm just going to open this window up. Okay, first of all, hang on, let me go back. Okay, now these are going to these here, they move the same pretty much. Okay, the S&P, Nasdaq, which is US 100, US 30, and this one up here, which is the DAX. Okay, all indices, and you can see that they move the same pretty much, don't they? Okay,
Yeah.
they're kind of in line with each other. All right. Now, something that you're going to have happening with, if you watch all 4 of them like this, sometimes you'll get a delayed reaction, if you like, on one of them. So you might have these 2 start coming down really quick, right? And this one's still climbing up. So in this case, like here, right, you can see this trade here. You can see these are coming down, and then this one was still climbing, right? Now, you see the size of this candle. This is what I want to show you, right? This is where you look for scalps. So this 1 hour candle here, let's go and take a look at it. Now, first of all, I can see that these were coming down. Okay, this one made that 1400. Was it 1400? Yeah, see? 1400, 1400. Where's this one? 1400. This one here came up to here and then continued down. Look how much they've moved, right? Yep. And again, this one. So these ones were much faster. You can see how fast this spike and then down. This one was very fast because it pushed and then comes straight down, finishing with a big candle. Now this one was stronger for a bullish. Okay, but so this is your first confluence. So we then go into we go in and we have a look on this one. And what you have is your 1 hour extreme POI here. So I take a look at the daily. When I look on the daily, I can see the price is coming down, right? Breaking lows. Okay, price didn't come to this POI here, didn't reach it. Doesn't matter, it's reacted and it's making order flow. You see, breaking lows, broke this big low. Okay, so this trade's closed now. I've closed it because of the bank holiday, Easter holidays. and end of week. So let's take a look at it. Okay, so I was expecting price to continue down with high time frame stuff, at least into this zone here. So finding my entry. Let's go now to 1 hour time frame. Let's have a look at, where's my bar replay? Yeah. Okay, now this was the end of hour, right? When I saw price pushing up on this candle.
Yep.
Okay, basically overextended, right? Let me text it. Overextended candles. Okay, overextended candles. Is that printed on the screen?
Yeah.
Okay, mate. Now, if somebody asks me what is an overextended candle, how can I tell it's an overextended candle? Basically, there's no way to measure it, right? Because it totally depends on how the market is moving. Okay, but if you're getting like, it's basically just a candle that is way bigger than all the other candles. Freak candle, right? In this case, this candle here was huge. Okay, and towards the end of the candle, it came into our zone here. We know that we've swept loads of liquidity. We've got all this here. Okay, and we're in the extreme here. So for me, this was a no-brainer scalp. These are the kind of scalping setups that you want to be looking for. Okay?
All right.
And basically, it's a skill, right? It's something you have to practice. And I'm really telling you to practice on demo accounts before you start putting real money on it. Or if you do trade them with real money, then use like really, really small, just so you can trade it 0.01 or whatever until you get the hang of it. But for me, right, I'm happy to take that. I think I sold this like about 3 or 4 times here. I don't use on one of my accounts, right? I don't use a stop loss. I don't use a stop loss on one account because I've got enough room to, and I know that with my money management, risk management, and all the rest of it. Let's say if I sold this here and it kept on coming up here, I've got a button I can click and it just closes all of them, and I just take the loss.
Yep.
Because what's the chances, right? When this candle has done all this swept liquidity, that it's gonna keep on moving. Okay, it can happen. It can happen, but not often. I'd say 9 times out of 10, it's gonna give you this wick. It's gonna give you a nice wick.
So the win rate is really high for the scalps.
Yes, very high. But what you have to be careful with, right, is that you don't get carried away with scalping, because it's very easy. And this is one of the reasons I don't like to teach scalping things to traders, because if traders can get emotional over 15-minute setups and 5-minute setups, well, when you start scalping, the emotions, they can heighten a lot, and traders can start getting lured into over trading and just doing silly things, basically emotions can take over. Now, just because I don't use a stop loss, it doesn't mean that you should. Okay, you really should use a stop loss. I really should use a stop loss. I know for me, when I scalp, I'm probably getting 80% of them. Sometimes I'll have a day of scalps, right? And I'll not lose one scalp. They'll all be profits. Okay. But that also comes down to how good I trade on the day. I have a bad day scalping some days, where I might take 2 or 3 scalps and I might take losses on them. And if I do that, then I'm just saying, right, the market's not moving how it's meant to be moving today. It's a really, really, really big, important thing to understand your own emotions. If you start taking losses, don't try and chase it. Don't try and chase the market and go, oh, I've taken 2 or 3 losses in a row. And I need to make that back. It doesn't matter. It really, really doesn't matter. Just be patient and wait until you see something like this. And this is huge money, right? It's huge gains when you're scalping. Now, I load on, right, with 2, 3, bang, bang, bang. And I might take profits here. Because you see this wick on here like this, right? This is another thing that will confuse traders. It doesn't mean that price did this. Okay. Inside here, price will have done this on the smaller time frame. It will have done this like this. Okay. It will have given you loads of opportunities to get little scalps. Okay, I don't know if it will. I hope this one will. I can't remember. But if we take a look on this one now, let's just mark this here. Make sure we can see it. Okay. Let's just take a look at it on how we looked on the 15-minute. Okay, so here we go. I think I've marked these because these were areas I will have bought it as well.
Oh, why?
We'll have a look at it. We'll have a look at it in a second. Hang on. So 1400. Yeah, this one. Okay, this one wasn't in line with the timing of the 1 hour, but this is a good example of. That's why I said to you, I do trade. Let's put our thingies on, just to have a look on this. Where's 7? Let's take a look. What color is that one? Green, 45. Okay, let's put a 30 minutes. Red. Lock in place. And let's put the 1 hour. 1 hour. Right, let's have a look at it like this. Okay, so first of all, we remember, right? This is a big structure, right? On the 15-minute time frame. We know this is a high time frame structure, 1 hour. Okay, we're happy with this. Okay, we've got order flow on the 4 hour. We're breaking lows. We're respecting the highs. Now this is the new high. Price pushes with a very strong candle. Let's have a look at the 4 hour candle time. Okay, right then. So 15 minutes. Okay, we've got a big 15 minutes candle here, right?
Yep.
And again, right, this candle here, it gives you a wick. You see? And these are things that you'll notice now, right? After we've done this session, when you look at the charts, and now we're on US 30 here. What I'm showing you here is just a good example, right? This happens with Euro USD and all of the pairs across the market. Only some pairs. This is a very volatile pair, or very volatile instrument. So it likes leaving wicks as well. Not often you get, huge candles that close flat as a strong candle. If you do get a strong candle, right, this is something I have spoken about in the group in the past. You can often see price retracing it to the extreme, and then it'll go again and break the high. Okay, this is candle study. So if you get a strong candle finish, close, you can expect the next candle will go to at least 50%, most of the time to the extreme, and then it will finish in the extreme with a wick So you might get something like this. Like that. Okay, so that's another candle pattern to keep an eye on. Like even on the bottom one here, you can see this, it did close with a wick, right? But I would have wanted this to be here in this extreme here. And if this candle would have, 15-minute candle would have come all the way up here, I would have just clicked sell on this. Okay, and I would have been confident that that candle would have finished with a wick. Okay, and now you see how timing, all of these, the timing is aligned with the candle. Okay, it's a confluence with the candle. So like the 15 minutes candle here, you would wait, maybe this would be the last 5 minutes of the candle, and if it's still climbing and it's in a POI, then you can take, excuse me, you can take the sell scalp on it. Okay, so let's go back to here. Okay, so 15-minute time frame. We've got our POI up here. This is where we want to see price come. Now you can see price starts pushing up strong. Okay, breaking, and then it gives you this candle here, which is like a freak candle. It's really, really big. If you get these big freak candles and they go into your POIs at the extremes of them, you can sell them. Okay, but you have to be ready, and this is the thing, right? You have to be ready to let the trades go, close them if they keeps pushing. Or if you, let's just say you get a little bit carried away with patience and you see the candle here and you go, right, I'm going to take it there, and then price still pushes in, you can close this and you can go for it again here. Okay, so you can take a small loss and then go for it again. And then when price goes down, you have to come up with your own rules. What are you happy with taking profit? Are you happy to take profit on just the scalp, or are you going to hold it? And like I say, for me, I would have been in with three or four scalps here. I would have probably closed one on the 50% of the candle. I will have taken one there, which covers me if it does decide to go higher and I take a loss. Then I'm not taking a loss. It's just managing the scalp, yeah.
Yeah.
And this is something that comes with practice, and that's why you need to practice it and not just not just dive into the deep end and go on the live account and start trading this as if you've been doing it for years. Okay, you don't want to be doing that. You really need to practice, because when you practice it, it will open up different doors of emotions with your trading, and you have to have a feel for it and just see how it works for you yourself. But believe me, if you just start focusing on these kind of moves, there's no way you cannot make money, honestly. Okay, there's no way you cannot make money.
So,
yeah.
So the time frame, for the time frame, what basically, what time frame do we look on when we scalp? Like,
you put them all. You need to put, like for me, I've on one of my screens, right? I've got this. I've always got the hour. I've got I'm looking on the 1 hour. Okay, and then if I see on the 1 hour, right, I'm in the last half hour of this hour now. This candle is starting to look really, really extended and big. Then on my other screen, I will go on to this, and I'll be looking on the 15 minutes. Okay, so you need to look at all of them. I know if you've only got one screen, then you just have to keep flicking through them.
all right.
Okay, or you can split your screen with this into two, and you can have the same pairs on these, right? You just have to adjust. You see symbol. If you click on this, it will show you the same pairs. And if you click on, you can adjust your time or whatever. Okay, have you done that before?
No.
Okay, well that's what this is. You can monitor two pairs, or you can monitor them however you want. Okay, and then these options here, you'll have to have a play with them on your trading view. But basically, if you click on it, then it copies it onto the other screen. Okay, so if I click on symbol, I don't want to do it in case it messes up all my symbols. But if I clicked on this now, all of these here would turn into this US 30. Are you with me?
Yeah.
Okay, and then if I click on time, and they're all going to stay on 15 minutes. Not time, sorry, interval. They're all going to stay on 15 minutes. If I take the interval off, and let's say we're looking on the same pair here 6 times, right? Let's just say, okay, so we've clicked on this. This is blue. Let me do something. Let's do it. Let's do it on here. I don't want to do it on there, but in case I mess up my chart. But let's have a look on this now, right? We've got Dixie. Okay. Now let's move this to US 30. Right. Okay, let's go to US 30, 1 hour. Okay. I'm just trying to figure out a way here for you to do it where it works for you. Okay. Okay, now we're on US 30. You want to see the 1 hour. Okay. You've got all your markings all done. Now you go on to hang on. Okay, now you're on to another. Let me move. I've got so much crap on here. Right. Okay, you can see, right? British pound, Japanese yen's come up. Now,
Yep.
Let's move. First of all, let's move. Okay. Right then. Now, Dow Jones, okay? US 30. We want that to be on there. So we go to here, we click on symbol. You see this change?
Yep.
Okay, so symbol. Now we click on interval. You see now they're the same, 1 hour. Okay.
Yeah.
Now, let's take the interval off like this. Now we can change this to 15 minutes. See? So we can change this now to whatever you want, 5 minutes. So you can have, if you've got one screen, you can monitor both time frames and you can change it or whatever.
This is for like the trading view premium, right? Or is it?
I'm not sure. I couldn't tell you, mate. I don't know. I don't know.
Okay.
I don't know, mate. I don't think you have to have premium. I don't know if it's standard. You'll have to check with them. I'm really not sure.
All right.
But I used to have the pro before I had premium. I used to have the pro version, and the pro version. I could do all this with them as well. You'll have to have a play with your trading view and see. You know, if you need to upgrade to pro, then it's worth it. It's worth doing it. Okay, if you want to look at more than, you know, but like I say, maybe you can. I'm not sure, but maybe you can look on. You know, you can look on the same as what I just showed you then. Right. Okay. So you understand that, and then if you want to, and then another thing, if you're looking at all of these like this, you see in this top corner here.
Yep.
This square. If you click on this, it actually opens you all up to your screen like this.
All right.
Okay. And then, oops, if you press escape, then it goes back. Okay, so let's just go back to this for a minute. Okay,
So your trading,
Yeah.
many pairs.
Say again, Matt.
You're trading many pairs.
I'm not trading them ultimate. No, I'm like I say, I look at the indices. I look at these because they give you clues. To be honest with you, I mostly trade this one or this one. I don't really trade these. They're kind of they just kind of give you clues, because sometimes they move or sometimes this moves, and one of them might lag. They might lag behind, and then you can kind of predict what's coming. But you want it to, like, if you're getting spikes, these ones here come alive, the market starts moving, and this one's behind, then you can kind of have a look at all of them if you've marked out, your POIs and everything. And I know that I'm looking for only sells. Let's say you're looking for only sells or whatever on this, and you want them from here, then when price gets there, then you've got to be ready to take them basically. And another thing is they can guide you with holding them. These might start crashing really, really quick, and this one might be slow, but because these ones are crashing, it's a high probability that this one will start eventually crashing as well. Are you with me?
Boys. Yeah.
Yeah, they
So
kind of
I
tell
need
you
to
what's going to happen.
okay.
Yeah, it's not all the time, but this is why I've got this on one screen, because I just keep an eye on them. And also, sometimes, right, there's a moment where the markets, I always say to myself, right, the markets come alive. So you might have the markets doing this, and then all of a sudden, you start seeing these big markets doing this, right? And you can just see the market's alive. And that's the best time to jump in and start looking for scalps. When it's crawling like this, yeah, there's nothing there. There's nothing there. You're not bothered. You're not interested. Just focus on just taking EU entry models or whatever.
Oh, okay.
Okay. It doesn't mean because you want to scalp. Sometimes the markets will be dead. The markets will be quiet, and then like all this, very quiet. I don't know. There's a thing right with the market where you just know the market comes alive. I always say to Lafayette, I say the markets come alive, and you can just see the price. It's like I call it twitchy market. I call it the price action starts twitching. It's hard to explain, right?
Yeah.
It's just momentum coming in. You can see because you can see it happening here, here, here. You can see gold doing it. You can see JPY. You can see them. They all just start getting twitchy on the 5 minutes, 15 minutes. You can just see it. And when you start seeing the markets come alive, it's the time to start going, right, there's a move coming. I can just see there's a move coming. And it will happen across the whole market, which it just tells you, there's an algorithm. It's an algorithm that's not just trading one pair or one instrument. There's an algorithm that's covering everything in the market. That's my thoughts, right? I might be totally wrong, but that's what I truly believe, and that's what I think is happening. There is an algorithm that is attached to every single thing in the market, and when it comes alive or when it's turned on, when it starts working, you can see in the price action, because it starts twitching, and it's not just one pair that starts doing it. Everything starts doing it.
All right.
You'll notice it. Okay, it just comes with time and practice and monitoring, like having something like this to the side where you can see price action. But it's it's crazy. But yeah, so you can see here, right? There's nothing more to this scalping than this. It's so, I don't want to say simple, because it isn't simple. You have to be really like I said, strong with your emotions, and you've got to be strict with the setups that you want to trade. Okay, but you can see, right, this on the bigger scale is just a big entry model, but the way of entering this one with in a scalping sense would have been to just get in on these. Now, if we were looking for an entry here on this with our entry model, then we would want to be seeing something like this, right?
Yeah.
But this won't happen. This won't happen. It'll just these extended candles will just run away from you. They'll just go. They'll just run.
That's why.
That's why I can't post entries like this in the group, because guys have paid me a small fee to teach what I've taught already. You know, I've given as much value as I can to make everyone be able to move forward and make money, you know, and as far as I know, all the guys are making money with it now. But yeah, this is advanced stuff. This is more advanced stuff, you know, and as you can see, you know, price tanked after this. If we go back to here, right, let's take a look on the 5-minute time frame. Okay, and as you can see here, right, extended 5 minutes candles here. So when you're in the last half of this candle here, then we can start. You can even go down to, let me clear that. Let me bring.
So let's say
Yeah.
we are at the point of interest, but price is not at the last 30 minutes of the Q zone. What happens then?
Well, this is what I'm saying. I do still trade them, right? But not all the time. The setup has to be really, really nice. So for you, I would rather you stick with this zone here. Okay. Sorry, this zone. I would rather you focus on this zone. By all means, monitor price when it comes into here as well, just so you can start gathering data on, you know, how they act and what they do and things like that. But for the higher probability ones, you want them to be lined up in here. You want them to be lined up in the last half hour of the candle, right? So 14:30. Okay, this is 14:45. So this, remember, this one's even better. Okay, but we didn't get it. It didn't come there. Okay, but it did come into this one. It did come into our POI. It did hit 50% of that POI. Okay, so you could be like, bang, smashing scalps in here. Okay, and maybe having your stop loss. You're not expecting price to come outside of here. Okay, and because the extended candle, you are going to get a reaction. Now, if you're taking scalps, really quick scalps, remember what I mean quick, you have to act really quick. So if you're taking a scalp there and then you get a wick like this, sometimes I take profits. I've taken profits on this one, right? But my other scalps here will be risk-free. They'll be risk-free now because price can do this, obviously.
Yeah.
Okay. But the chances, you know, we never know what the market's going to do. Is the market going to go up or down? We don't know. We don't have a clue. I don't know. I don't know if the banks are going to keep pushing this up, right? But what I do know is when we see these big, huge candles and they come into a POIs, I'd say 90% of the time, they're going to give you scalps. They are going to give you scalps. Even if you take some scalps and take profit, and then price decides to do this, and you take a scalp there, and maybe you take a couple of losses, I can guarantee you that if you've scalped it properly, you will still be in profit from this. Are you with me?
Yeah, still trying to figure things out.
You just have to practice it, mate. You have to practice it, honestly. Like anything, right? You have to practice it. What you also need to consider is how many candles. There's 1, 2, 3 5-minute candles here. Okay, and this is another thing I also keep an eye for. Okay, now you know you're going to have these multiple candles because you've done this big move on the 1 hour, this big move here, right?
Yeah,
Or this big move here. So you know that inside here, there's going to be big 5-minute candles as well. So when we look at them, we count them, 1, 2, 3 big 5-minute candles, which lines up with 2 big 15-minute candles, which are inside a big 1 hour candle. Okay, so they're all big extended candles. Okay.
yep.
So when they get to our zone, we can start looking for scalps. If we want to look at 1 minute, what you can do, okay, so we're down on the 1 minute time frame now. You could wait until you get one bearish candle. So you know, right? Okay, it's not shown here. Let me just put it on there so I can see. Okay, so you know that you're in this zone, 1 hour zone here. Okay,
Yep.
you know that you've hit the 50%. If you, I don't always look at the 1 minute time frame when I'm scalping. All I need to do is look on the 1 hour candle, 15 minutes, and I might look on the 5-minute candle. But what you could do as well, as a rule, which something it is a good thing to do, is like in this case, you can wait until you see one bearish candle and then you can sell it here. Okay, it's up to you. I don't trade like this because I don't use it, because a lot of the times what you're going to get is you're going to get a candle like this when you've got these moves. So if you wait for this candle, you've basically, that's your scalp gone already. You just have to have the balls, right? You have to have the balls to just click. And that's what it is. And I remember when I started trading like this, it's basically, it's not something you get taught to do, because who teaches you to trade against momentum, right?
Yeah.
Nobody teaches you to trade against momentum, because you shouldn't. And it's true, right? You shouldn't trade against momentum if it's against the trend and all the rest of it, right? But this is different. This is trading extended candles, which, okay, people can look at this and say that is huge momentum against you. It is momentum, right? But when you put it all together, the 1 hour, 15, and the 5 minutes, the probabilities when you get to these zones, because that's what you've got the edge now, right? You know how to look at the market, and you know that you're at an extreme supply level or an extreme demand level. So you've got that now. You've got that edge. You know how to read the market. Now this is an extra tool you've got on how to get into those trades before everybody else. Okay, and I can guarantee you, if you focus on what we've just covered in this today, you'll be catching these trades here, and you'll have a lot of traders that are going, right, there's a setup here now, I want to see this, and then they want to sell with an entry model. Okay, which is fine, which is great, and that is how we trade with our entry model. but now you've got the tool where maybe you're still waiting for this one, but at the same time, you already have a trade running from here, and you've already made money on the scalp on there. So if you're waiting for an entry model and price comes up, and let's say price takes you out because he wants to continue up, you've already made money on this one. Okay, so this doesn't matter. It doesn't matter what it does. You've already made money. And if this comes up and then goes, then you're just making more money.
Okay, so what pairs do you advise I trade right now?
What price? What, sorry?
What pairs do you recommend me to trade for starters?
I would say just focus on Euro USD. You don't need to. I've got the luxury of having 4 screens. Do you know what I mean? I've got 4 screens that I can trade from, so I can see all of this, all of these things that I've shown you. I can see they're right in front of my face every day. I've got Dixie on the top screen, and I don't have Dixie in my face all the time, but I have it on there, and then I might have my MT4 over it. So I might be looking on MT4, right? I've got on my other one, I've got Euro USD by itself. And then on another one, I've got Euro USD and JBP USD. And then on another one, I've got this one with all the pairs, with all of these. But you can, it's hard for me to tell you what to monitor because you haven't got the setup like me. All I would say is, have you got more than one laptop, or have you got one PC, or what?
Just one.
Just one screen, yeah. Yeah. So I would say just focus on, you don't need to, what I've shown you, right, is what I do, and because I can. You don't have to necessarily do this, right? You can just look at Euro USD using exactly what I've shown you today with extended candles and whatever. Okay, and you can just focus on Euro USD, and because you can master one pair, right? That's what I do. I just trade. I scalp on the other ones, but my baby is this one, right? Euro USD. This is the one that I make my bigger profits on, if you like, because I'm following every single thing that it does constantly. Okay, when I do my analysis on these, they'll be like 1 hour. If I'm bored, I might go down and I might look on 15 minutes, but I don't really look on. See, sometimes I'll mark them up, but I don't really focus on, on those unless I see something like this, a big candle, then I'll just focus on this one, and then I'll be looking on, everything that I've just told you with, okay, I can see 1, 2, 3 big 5-minute candles, or let's say we were here. I'll go, right, oh, wow, that's a big candle there. And then I'll just go, okay, you see that just then? Okay, this is the thing when you back test candles, right? It doesn't actually show you properly what you see. You see that wick that it just showed you a little bit there?
Yeah.
Let's go back. So let's say you were like on the 5-minute time frame, right? This is your extreme on 5 minutes. This is just another example now, right? Because it does this all the time. So watch this candle now, not this one, the next one. Okay, you see that wick? Did you see it?
Yeah.
So the wick was like this, right?
Yep.
So basically, right, that was a good example there of, because you can't see it, these 5 minutes when you back test them, it just shows you the 5-minute close. But you can see when you get momentum coming in with huge candles, what they actually do. Okay, so this will have come up here very, very quickly, giving you that huge wick and then pushed up.
So that will be a trade as well.
Well, it depends on, like I don't tend to monitor them on 5 minutes unless I'm, getting close to the zone that I want to, be selling it from or whatever. But I would have had alerts set on extremes of these moves. But what you have to be careful with is price has broken this high here. You see, and price respected these lows. So this is a weak high, right?
Yeah.
You see the order flow is going up. So your entries on this would have been, maybe for price to push up to this zone that we're monitoring up the top, you'd have been looking for, price to come back down here and then push up, just like it did. Again, you see how that made a big wick and then went back up. So it just does it constantly. This is a good sign when you're watching a candle that there's sellers coming in heavy as well. Okay, so we see here big sellers, right? But then it closes the wick. See the next candle, huge wick, and then they close the wick, and then again comes up now. So we know there was loads of sellers here and here, but it takes them out all the way up to this point, and now they come, because at this point all the buyers are taking profits, and those big sellers are back in, and they come back in. Okay.
All right.
Let me. Where's the buys? I took some buys on this. Just want to see them. Was it buys? I can't remember what I did with this, man. Let's move this back to, yeah. Okay. I think, where are we? Oh yeah, this is the one that I took here. You see this one here? I might have scalped these as well. I think I did. That's why I marked them. Again, right, we've got the Asia session range here. Okay, so you can see here, price here, taps, right? The only thing with these is they weren't with the timing. You see the timing?
Yeah.
This was early here. I'm not sure if I did trade this or if I was considering it. I can't remember. But anyway, end of the hour here. Price didn't sweep the lows. I was expecting these lows to be taken, and it did with this candle here. Let's go and have a look at it on 5 minutes. Yeah, I think I marked this because of the wicks here, So basically, this is buyers. I know that there's buyers coming in here, and then price still pushes down, and then he eventually breaks the Asia lows. And it was on, what's that, 25? Yeah, that one. Okay. There. You see that candle just then? Okay, so we've broken these lows here. Why have I got this one marked? I think I can't remember, but I might have taken the 50% of this candle. You see the wick?
Yeah.
Because the wick takes out Asia lows liquidity, makes this wick, and then it taps into it here. Let me just mark it. Yeah, 5-minute wick. Yeah, you see there? Bam.
Yep.
Okay, and then price went up, come down, back up. Okay, making big wicks. But again, if I'm I don't really focus in onto like the smaller time frame. I just like to look at price when it comes into this range and see what they do, and see that huge 5 minutes that swept this liquidity, and this is in our right at the end of in this zone. Okay, so these are our zones here, and this was like a freak, not freak candle, but it's much bigger than all of these, right?
So do you buy it?
Yeah, I'd be looking to buy it from here because it's sweeping liquidity. I know that we've got the POI to go for up the top. We've just swept Asia lows, breaking structure. So again, right, it's just basically an entry model, but it's a way of entering. Okay, so you've got structure there, you got structure there.
There is no POI, right?
Well, the POI is your liquidity.
Okay.
If you look on a you're just thinking on this time frame, right? These wicks, right? This is the unmitigated part of, right? So you break structure, we break structure again. Okay, so you've got these are 5 minutes breaks of structure, remember? Okay, now if you look on, let's do this. I can't see if it did tap it, but let's go from here. Okay, so this, first of all, this wick here. Okay, so you'd have a stop loss here, right? Now, there's your 50%. It gets mitigated, right? What this part of the wick now, is that straight? Okay, so you see where price came to. Okay, so
Yep.
this part of the wick was left unmitigated, right? You've got inducement here. So basically what you're seeing here now is this. Entry model. There.
Yeah.
You see it?
Yeah.
And you've got obviously structure like this. Okay, break structure. That's what you're seeing now. Okay, but again, right, if you're looking for the entry model now to buy this, either you can leave a buy limit here, or you can just wait for something like this, a big extended candle, because again, it's timing, right? Look at the timing. It's the kill zone. So in this kill zone, we're looking for price to push up, and the next candle, the next 1 hour candle, which is here, to push higher up. Don't forget the structure we've got is doing this as well. Okay. So this is basically an entry model there. And the method of entry is this big candle here pushes, and then we go up. Okay, you following?
Yeah. Can we have some examples on Euro USD?
Yeah. Hang on then. Let me just clear this.
Since that will be what I'll be focusing on.
Yeah. Let me get that off. Think. Right then, let's go and have a look on. Let me have a look and see from my trades, because I did take. Where did I trade? Let's have a look in here and see what we see. Right then. Okay then. So, you see this? Got these on here from before. Okay, we've got an example here actually of when price. Where's my? Right then, let's have a look on this here because I can see that this one was down here. Okay, so we've cleared. This isn't in our extreme. Obviously, we've pushed down way below. Where we are on EU at the moment is crazy, man.
Yeah.
Crazy. Honestly, we've you got to expect some big longs coming soon. Okay then. So let's go to high time frame. What could we see? This replay thing is not great when you're flicking through because it forgets where you are. Okay, I take my markups off, you see. So we can see that's a good level of, let me put this on. See, we've got that wick to there. This will have been on an EOC. What time frame are we on? 1 hour EOC. Okay, I would have been looking for a reaction from somewhere in here on price to push, right?
Because there's a king order block.
Yeah, basically it's a range. You can see here with this wick here and then this wick, and then you've got this really big push up here. The only thing that I don't like about these ones are that you've got imbalance here, you see?
Yeah.
We clear this imbalance here. You can see the reaction price does when let me mark the imbalance on there. There. Okay, so you can see what time frame are we on? 1 hour. Where's imbalance? Imbalance 1 hour. Do another one. Yeah, this is the thing. You've got this imbalance. Okay, so you see when price comes to these imbalance levels, I don't often mark up the imbalance because you can see it, right? But a couple of the guys have asked me to put, if I can put imbalance on my charts. So I often just put these boxes on now. So you can basically see if you see my chart and you see these boxes, you can kind of see, oh, that's big space where there's imbalance in the market or whatever.
Mm-hmm.
Unless it's these kind of zones, then they'll either be imbalance or they're going to be supply to demand or demand to supply. Anyway, so let's go back into this one, right? So we're expecting a possible up move, right? We had all this liquidity up here. Now, let's have a look at the timing of the trades. So we can see, right, if we just look on the 15 minutes first. Okay, so nothing came into this zone. Price came down. Actually, it did. Sorry, here. You see here? There's your zone. Price pushes up really quick, sweeps this, and then comes down. Okay, now price in the probably wouldn't have got nothing from there. Is this the same section we looked on earlier on? I think it is. Price, it is, because we had the 5-minute POI here, and then that was an RBR there. Okay, and then price comes back down, takes the liquidity. Yeah, it is the same zone, back on the same one.
Yeah.
And then we've got this here. Let's go and find a different. Let's go and look at the bottom.
You told me basically we could find like few scalps per hour. Is it what it is?
Say again, mate.
You said that basically you are able to find like a few scalps within 3 hours.
Yeah, you can using this method, right? You can just come on. You can literally just come onto the chart to trade for the last half hour of an hour. So if you're out doing whatever, right, you can come on and you can get trades whenever you come on. You can. There's always trades. There's always the thing you've got to be careful of is that you don't get hooked into this, right, and think just because price is in this zone that you're going to click sell, right? You're not going to do that. You have to have a reason to sell. Okay, structure, liquidity sweep. You know, here liquidity sweep coming into a POI, the trend's going down, and then this now is the best tool you've got to give you confidence to take in the trade is the timing and the candle, okay, and what the candle looks like and how strong it is. I mean,
the candle must be overextended, right?
Yeah, just a big candle that is overextended, and it lines up with everything else. It just makes the trade super high probability. Now, I'm not, you know, you're not going to walk away from our session today and be a master at entries, right? You don't want to be thinking, right, I've got this, I understand everything he's saying, I'm going to be a master at this now. Maybe you will be, right? But you have to understand that it still takes practice to get these entries, right? But from all the stuff that you know now, and now you've got this in your toolbox, this should help you with your trading. I think it will. I really think that this will help you better yourself as a trader and better your entries. I'm hoping anyway, you know, and like I say, we've got another 3 good sessions of this where we can go over things again. You can get all your questions out to me and we can look at, if you want different pairs, we can focus on EU, or, you know, we can look at this on any pair you want in the market and test it. We can do anything you want, okay?
Okay.
And you'll see how powerful it is because it works. I've not used this on anything other than, you know, the things that I've shown you on here, but I'm pretty sure if you did say, right, because of my trading session, I want to look at USD JPY or whatever, because this is running during the time I'm awake or whatever, then we can do it. We can go and have a look at it. You know, we've got these sessions now to do these things, right? And find something that works for you so you can start making money.
Yeah.
And we'll get there. We'll get there. But you just have to, you know, your homework is to watch this video again. Okay. At least 2 times, all the whole video. Trust me. Watch it again and take notes, write things down, and then just go back onto the chart and practice. And like I say, you know, when you're using this bar replay to look back and back test, it's not the same as when you trade live. For example, what I just showed you with the 5 minutes wicks there, you had the 5 minute candle doing this. And it shows you briefly that it did this, but then it closes like this. Yeah. So you'll see on USD when you trade it live, that when you do have these big overextended candles that even close like this, that inside this, you will have scalped it. You will have got a scalp. It doesn't necessarily matter when you're back testing, right? On this, it doesn't really matter what the candles are looking like now, because the candles are closed. The candles are closed. Like let's have a look, for example, on. Okay, so you see, it might not be the case, right? I might be wrong or whatever, but if we have a look on these candles now. Oops, what have I done? Let's go back. Let's go to this one.
Yeah, just some examples.
If we just look at that wick, did you see that?
Yeah.
Okay, so if you're back testing, you can't see that, right? Because you'll have people back testing going like this. Oh, they're not going to see anything. Oops,
Yeah.
I'll go back. So for example, right, if you're trading live, you can see liquidity. Let me draw an arrow. Take that off. Okay, so you've got liquidity here.
Yep.
Okay, you can see that, yeah? You've got a lot of liquidity there. Now, next candle, there's this. Look at that. So if you wanted to scalp, right, because that was an extended candle, if you scalped, let's say even put up 3.4, whatever, right? We're on the 15-minute time frame, don't remember. I remember scalps are, you can take your profit in and out. You can take 1-to-1s, right? Or 2-to-1s. It's totally up to you. I know some scalpers, right, that they enter with their risk up here. And because they've got such a high win rate, they just take profits with their scalps like this. But their win rate will be like 80%, 90% or whatever. So if they get a loss, then they're going to take, a shitty loss there. But they'll be doing this all day. They'll be doing it all day. And it doesn't really matter about this because they've made a ton of money. Do you know what I mean?
What's your risk to reward average?
I don't really put numbers on my risk to rewards. I really don't. It totally depends on because I read candles, in such a way, an advanced way. Then I might take profits. I always go for more than 1 hour when I'm scalping. Like I wouldn't close the trade, based on negative to what I was willing to risk. But and like I say, the method I use for me that works for me, if I'm entering at a level where there's a potential that the trend could continue down, then I will have 2 or 3 scalps in here, and I will close maybe 2 of them here, and then I will leave the other one at risk free in case the market does just continue with the trend down. So then I will have made my money, and then if I get this big wick, but also like in this case here, let's just print that again. In this case here, where the market did this huge wick, I would be expecting for price to close that wick as well. I probably would take my Well, I still would leave one trade to run though, because if candle prints like huge wicks and it's early on in, like, say, the 5 minutes candle, then there is a high probability that that wick will get closed to halfway at least, you know. Let's take a look at this on the 5 minutes. Let's move this back to here. Okay, let's print the candle. Okay, there's your 5 minute candle. Okay, we know that we've got all this liquidity here.
Yep.
Next candle, see this here. Okay, and you see how the 5 minute even closed. You see that? Let's look at it at the 1 minute. Oh, hold on. Even when you see the 1 minute now, you'll see the same thing, right? You just watch this candle. See? It made like that. That's like a huge candle, right? And you think, right, that's a massive 1 minute candle compared to everything else. Look at all the candles that it's taken out. Let's look at the seconds. And this is what it did on the seconds. If you see it on the seconds, right?
Yeah.
It comes down, makes that big wick. And 5 minutes. Where have we gone now? Is it? We've lost now. It's not. It's taking us. This is why I don't like this, man. Which part of this? It won't show us. It won't show us that. That wasn't the. The data won't go as far back as we want to have a look at it on the small time frame. But you can see, right, what I'm talking about with these.
So basically, the trade is just a liquidity sweep and an overextended candle.
Either liquidity sweep or into a POI. They're the two. Just the same as we do with an entry model, right? We want to see liquidity sweep, inducement, yeah? That's a liquidity sweep, and into a POI.
So basically,
yeah.
Basically, the liquidity sweep, does it has to have an overextended candle for the trade?
If you're scalping, if you're going to scalp it, or yeah, if you're using this method of entry, remember, this is the advanced way of entering. Yeah, like you can, the way we normally trade with our entry models, we're not looking for overextended candles, are we?
No.
Okay, that's just, you know, that's just a standard way of trading and a standard way of teaching for me to teach traders how to trade and how to get into trades, how to be safe. If I try to teach every student this method straight away, I can tell you now, they would blow their account all the time. They would just get carried away with it, and they would start seeing overextended candles everywhere. And that's why I'm telling you now that you need to. I know that you're an advanced trader, right? You are an advanced trader. Maybe you're not making money in the market yet, but you've got all them skills in your head of what to look for and what to see. You just now have to put it into logic and just put everything together now, and hopefully this will, you know, push you on to the next level.
Man, if I'm an advanced trader, I would have been profitable with the standard entry model.
No, it's not true. It's not true, man. It's not true. You've got the skills. You've got advanced knowledge of how to make money. There's something along the line that you're not doing that we have to figure out. You have got the knowledge now. everyone in our group, right? If they've learned what I'm teaching, they've got advanced studies, right? You've got advanced items in there, tools that should be making you money. And if you're not making money, then there's something wrong, right? As in, maybe it's not suitable for you with the methods that we're teaching. Maybe it's just not the style of entry that you like. I don't know.
Yeah, I find the entry model very low probability.
Maybe
Yeah.
because you're looking for you're not looking for the right entry models, and
Uh,
these are again, it comes down to selection, right? Because if you select the right entry models at the right zones with the characteristics that I want you guys to focus on, the high probability models, especially
like,
for a reaction. So
like you know Jones, Lafayette Jones.
yeah,
He told me his win rate was only 15%.
yeah,
Like
because he goes down to the 5 second time frame.
like it's very bad for the psychology, you know.
Well, it comes down to individual traders. His win rate might have been that low, but is he still making profits?
Yeah.
That's what matters, right? I made a post about this in the group the other day. You can have a win rate of 10% and you can still be making money in the markets. Do you know what I
Yeah.
mean? It doesn't matter what your percentage of win rate is. I know a couple of traders that have a win rate of something like 20%, and they're doubling their accounts like every 2 or 3 months. You
That's
know what
very
I
high.
Yeah, it's and then you have people who will look at their win percentage and they'll go, "Oh, I don't want to trade like that. That's a shit win rate. They must be losing so much money." But they don't. They're making a ton of money. They're making loads of money. And like I say, I've got a couple of different methods of entering into the markets. I could go down to being super aggressive on the super small time frame, and that will bring my win rate down as well. But
Yeah.
I know for a fact I'm going to make money. I'm going to win. I'm going to make big money because when I get the winners, they're going to be really big winners. And the little losers that I'm going to get, they're not even going to put little dents in me. You know what I mean? And I'm confident. And this is where you've got to be confident with the system that you're trading, and just let them play out. We'll come on to in maybe in our next session. I don't want to overload you with more things now because this is quite a lot of things that we've covered today.
All right.
Okay, so I don't want to overload your brain with too much now. I just want you to practice this now. Mark, when after this session, you know, and for the next week, I want you to mark your charts with these. Okay.
Uh,
When you're talking, if you want to talk about timing of the trade and stuff, obviously post it to me privately. An overextended candle. Don't post it in the group. I don't want the guys to start getting confused.
yeah, I won't.
Okay, so this advanced stuff is part of, you know, something that I'm going to help you with on the side, right? I'm not going to be pushing it on to like all the guys in the group. I just want the guys in the group to focus on the entry model and that's it. Okay, because that's what they've paid for. So that's what they're getting. So this stuff that I'm showing you now, you know, if you want to post me like an example or whatever, then do it in a private message, yeah.
Yeah, okay.
Okay, mate. And like I say, I don't want to push on too much. And here we can look at a few more examples, but when we go into our next session, I will show you like how I would scale into a trade as well.
All right.
Okay, because that's something more advanced that you know we can look into how I execute when I take trades on EU or whatever.
All right.
Okay, let's go to a different part of the chart, and what we'll do is we will let me take this drawing away. Take this off. Okay, the thing is, when we look back too far, it doesn't allow us to see too much on the small time frame, you know. Let's have a look on. It's all right. Let's go back to which part did we just do now? Right, let's go back to here. Which point did we just focus on now? It was up here somewhere, wasn't it? Let's have a look in here. See if we've got anything down here. What time was that? 5. Okay. Let's put the day. You see what happened there, didn't you? Again. This is what you want to look at when you do back test, right? You've got all this, you've got a high here, you've got POI, right? So there's liquidity above all of this. And then you look on the next candle, look on the next candle, you see the wick. That wick, that wick came from sweeping this. And it's a big candle.
So you have taken this trade as well?
I'm not sure if I traded this, man. I can't remember. Possibly not, because I was looking for price to push up higher. I don't think I was looking for shorts here, to be honest with you. I was just buying because of where we are in the market, right? Because we're all the way down here.
Oh, okay.
Yeah, because we've swept this liquidity from the lows. I would have been a long trader for sure. This is what I've been saying to the guys in the group, you know, all week. I've been saying when I get into trades down here, I'm basically focusing on longs all the way. Okay, so anyway, let's 15-minute time frame. Where right. So what I want you to go away with and practice, right, and start doing is marking up your charts the same way as I've showed you. So 7 o'clock. This is my hour. That's my hour. Then I'm going to go 7:45. That's going to be green 45. Then I'm going to go 30. That's going to be red 30. Lock them. You know how to save these templates, don't you?
No.
No, okay. So all you got to do, let's say you're using this tool, and then you put in all of this that I've already showed you, right?
Yeah.
Once you've got all this, you just go to templates, you click that arrow, and you can save as. And then you just type in template name, blah, 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 and save. Okay, and once you save it, it will save it into this template. Look, if I want to click on my daily, okay, you can see my daily. Blue lines. If I click OK, you can see now. There's my daily.
Daily.
That's a daily one. Yeah, I don't basically use it, to be honest with you. There's no need to do it because you can see where the days are if you go on the day chart or whatever. But this is what I mean. You can say that's how, just showing you how to save them anyway. And then my days is just 1, 2, 3, 4, 5, 6. Okay, and all that's going to do is if I'm on the daily chart and I mark day, that's all it is. It's just going to do like this. I'd lock them in place. They're my dailies. Obviously, you can see on the daily where your candles are because it's one candle. But if you want to then look back on the days, you can do it like this, or you know that they're going to be your days or whatever.
Yeah.
Yeah, it's just same thing. But anyway, let's go back to this, right? So that's what I want you to do going forward now and testing is mark up your charts with this, and then you can start looking at when you're trading. Obviously, I want you to do this live, right?
Yeah.
Okay, so if we look on, we're down at the extreme here. We've got down here. I will have taken a trade on this for sure, definitely. But I remember, yeah, this made equal lows, so I expect the price to come lower. You see here, I posted this in the group. There was 1 hour equal lows there. That way.
So why would you have taken this trade?
Which one? This one?
Yeah.
Well, because I knew we were at the extreme here. Let's say there, 5 minutes.
Oh, okay.
Okay. Then I know we've got inducement. So basically, I would have been looking for buys from here because I know where it's basically an entry model, right? And look at this. There's your cause. There's your inducement. Okay, but this is now where you have a choice now because of what I've showed you. If you're looking to buy EU from here, you can now decide if you want to put a buy limit on there, or because it's quite a big zone. This is what I do anyway. If I put buy limits on big zones, I go 50% of the zone like this, just to reduce my stop loss. 2.1, I probably would have had that at 2, like this. Or you can look at the candles, right? And use the candles as timing. So let's go. Now, the only thing with this, right, is 1 hour. Okay, so it was past. Okay, so price was coming down slowly. Now I would be looking on also 1 minute time frame. Now I've said this in the group before as well. You don't have to be the first into the markets, right?
Yeah.
You got a little doji down there, see? Hang on, right. Anyway, let's just leave it like that. Doesn't matter. We know that within extreme, right? Now, if price is coming down like this, you can either use your extended candles to look for your entries, or you can start studying price action. Now, we're going to come on to reading candles again in another session, right? But this is the kind of things that you want to start looking for when it comes to reading candles. You've got a strong candle here.
Yep.
Now we've seen that this is a 5 minute strong candle as well. So you could have tapped entries here. Okay. And when I take trades, I'm not going in heavy with when I'm scalping. My risk is small. And the reason I do small risk is because I'll take multiple, I'll hit it more than once. Okay, so the risk becomes normal, if you like. You're not going to over risk. Let's say you're risking $200 on one trade, right?
Yep.
And you're looking to enter by a method of scalping. Then again, I'm going ahead of myself. This is going to be another session, right? But rather than risk 200, I would risk 50. I would break it down into a 50. But I might click on 51, 2, 3, 4. I might have 4 like that. But the difference is, if I click on the 50 there and price comes here and takes me out, I'm only going to lose 50. But if I click on it and then price pushes away, I can put that to break even. Okay, and if I get then price pulling back, I might click on it again with a stop loss there. And then if price pushes away, I can put that to break even. And then if price breaks structure, like a big candle like this, then I'm expecting price to pull back into that 50%. I might add another one here. So now I might have 350 trades all there. And if it fails and it comes back down, these are going to be break-even trades. Okay. And the worst case scenario in this situation is that you click there and you have your stop loss here and price comes down and takes you out. So you take minus 50, which is nothing, right? Which is nothing because you're willing to risk 200. This is just an example. Are you with me?
Yeah.
It's a smarter way of trading. It's more clever because when you take losses, they're not going to even do a dent in your day. They're really not. Okay. The only down thing with this is that sometimes you can get price doing this and then going, and you've only got a small risk on there, but it doesn't matter. You're still going to be making money. But if you go down to the 1 minute time frame, it's rare, right? You're always going to get price doing this. So you're going to be able to add, scale in, click, 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 and you're getting in. Before you click your second one, you've got the first one on risk-free, and you just keep doing it. Okay, every time you're adding on to a trade, you want the other ones to be at risk-free. So if they do fail, then you're only going to take minus 50 or whatever. And if you're risking 1R for a setup, you're only risking, and 1R is, say, like I say, $200. Then if you're losing that, you're only losing 0.25 R. Nothing. It's nothing. But if price, if you're right and price runs away to where you think it's going to run away, then you've got 3 trades on. You're going to be making big money. Before you know it, you're going to be up like 5 or 6 R.
Yeah.
You with me?
Yeah.
We'll cover this right in our next session anyway. I don't want this one to run too long now. We're on hour 45 nearly. So the information we've got now, I just want you to practice it. And like I say, our next session we'll go into scaling into trades, and we'll also go over everything, okay, with timing that we've covered today, and just make sure that that you've caught onto it, you understand it or whatever. But yes, right. So see, this one would have been break even. Let's go back to 15 minutes. Yeah, so that one would have been break even. I can't remember if I traded this. What day was it? 13th of April. What time?
Can I ask you a question?
No, not allowed. Yeah, go on.
I mean, like the previous trade, the previous trade that you just explained, right?
Yeah.
How, like it was an overextended candle entry, or was it like
No,
Uh,
this would have been, this could have been both, right?
yeah, kind of. That's why I'm asking, like,
Yeah, it's, look at that. That was a big candle, right? So it's not like a great overextended candle. Okay, that isn't what we would call an overextended candle, and the reason it wouldn't be is because if we look on these ones here, they're all big candles. These are big candles. This one isn't like an overextended candle. You'd want, you know, let's say you have price here, and then you have a big candle like this.
yeah,
That's what an overextended candle is. But that's an extreme overextended candle, right? This
yeah,
this here is still a good candle to consider ending with a wick when you're in an extreme level. Yeah.
so how do you enter this actually?
For me, I would have entered this. Let me try
Using
and
the one?
find a case study. Let's see what I've got on here. 14:30. What time was it? 13:30. What day is it? 13th. Why can't I find it? Let me just check. 13th, 14th, 13th. Here it is. 12:30. What time was it? 13:31. 13. No, I didn't have. I'm just looking at it now. I didn't have. Took a. Oh no, it does say. Oh yeah, it says on my case study. Took a buy from here and got break even. Let's see, 13:30. Let's see how this plays out for a second.
Break even.
Yeah, I think I bought it there actually because I waited for the RBR rather than. I can tell you now, right? I will have bought this from here as well, but
Yeah,
that's why I can't. I don't post every single scalp. I don't post all my scalps and stuff in my case studies. That's what I'm saying to you. It's more advanced way of trading that I don't. I'm obviously I'm not teaching it to guys. It's not part of what I teach. But I I can guarantee you that I would have bought this here and taken some money from it here, and then I would
yeah.
and then I will have gone for an RBR here and then taken break even on it.
So basically, you would have treated this as an overextended candle or not?
Like I say, it's not really an overextended candle. It's a nice candle. I didn't, and it's hitting the half past, so it's hitting the end of that 15 minutes. If we look on the 15 minutes here, okay, so there, this was the 15-minute candle. Let's just do a study on this. Actually, let's pull it back. Okay. So you can see, right, this next candle taps it and then it kind of does that. See? Bong.
Yeah,
So the timing, I would have gone, prices come into here. Remember, I'm monitoring on the 1 minute time frame as well, right?
yeah.
Okay. So I've got the 1 minute, I've got the 5 minutes. I can see 1 minute and 5 minutes. I can see 15 minutes. I'll have my MT4 with Euro USD in the corner, and I'll have it on a different time frame to what I have it on one screen, for example. But if you're on the one screen, and I always say, just all you can do, mate, when you've got one screen is flick through them. You just have to, when you jump on, first of all, have a look on your 1 hour. You know you're coming to an end or whatever of an hour. Then you look on the 15 and you start seeing a big candle on the 15, maybe go to 5. Remember what I said earlier on? You can count the 5-minute candles. 1, 2, 3, 4. There's 5 1-minute candles here, and you're reaching the extreme of this impulsive move here. This trade would have been what I would say is a high risk trade as well, because you've broken this structure here. Sorry, you've broken this impulse down here. Actually, no, the structure on the whole, on the bigger. Remember that with where we are on the higher time frame, we are edging towards big longs coming, right? Because we're down at the extremes. So this is what I'm saying. I was looking for every opportunity I can to buy Euro USD because I was expecting a big push to come. All of last week, I was expecting a big push to come. And the only thing that's changed is that big news event pushed it all the way back down, which, like I say, I never managed to get in because it didn't tag my entry, but there we go. But yeah, so this was a good, valid entry model, right? To continue, because we've broken this. So even if you just traded this with, like I said earlier on, with a limit order like this would have been valid, right? And that's what most of the guys will do. Again, you've also got this 5-minute wick. I would have been also looking for the next candle to tag the 50% of this candle. 5-minute wick. But it didn't. It just went. So for me, with getting into this trade, I would have been confident after seeing this 5 minutes candle. I would have been confident to just click buy if it came down into here. And remember what I said, right? Only risking a quarter of what your actual R is in a scalping mode. But this is more of an entry, just a not standard entry model than an overextended candle entry.
All right.
Okay. And like I said, you know, the next, yeah. So if we have a look on this, I'm just thinking now, if this was a 5-minute wick, yeah, that's why I got break even. Look, so you see this 5-minute wick? You see it?
Yep.
That's what this was. You see the tap there? So this would have been also now, right? This will have been your zone here to buy 1 minute. So this is basically a reaction by rejection, right? This is your rejection, pushes up, gives you that wick here, and then it just comes back down, taps, reacts, and then goes. So I would have been in on this from a confluence with a 5-minute wick and structure, and then I would have been break even.
Yeah.
After this. Because if this doesn't go from here, then I wouldn't be confident that, you know, if it comes back down, I would be thinking it's going to keep going down. So once this candle, nice candle, I'd be thinking, right, put this to break even and then just see what happens. And obviously, you know, it didn't. So that ended up being a break even. But yeah, so you just have to put them all together. Like I say, right, you'll you'll have to practice what I've shown you and start looking. You can look back at the chart and you can try and back test it as much as you can, and then just see how it goes, mate.
All right.
Like here now, right? Look at this one here. Okay, so let's have a look at it on 1 minute. So we've got a 15 it. Okay, so look at this, the wicks down here. Okay, notice, right, this one is in the first half hour of the hour candle, yeah?
Yeah.
Okay, because there's your half hour point there. And this wick gets taken out. It doesn't get respected, it takes it out. So possibly if you want to be, taking trades in the first half hour, that's fine. But like I say, it's higher probability to wait for the last half hour. This wick ends up gets taken out, makes a nice candle, retraces the nice candle, and then pushes up. So if we take a deeper look into it, okay, 5 minute structure, broken here. Okay, so all this has done is sweep liquidity from these lows. Now we're looking for longs, right? Our main bias is for longs because of where the market is. Now we take a look at, see, I've marked something there. So we'll take a look at this in a minute and see what I've marked. Let's just put this down to here. Okay, so we look on the 1 minute time frame. Okay, now look, all these wicks pushing prices down. This is reading price action, right? We've got all these wicks, and then we get these candles getting strong. We've got this candle now. This is a nice candle. Tries to push down, and they push it back up, and they go, no. And it just doesn't push it just up there. It continues with a strong break of all these wicks. And this would be our 5 minutes breaker structure as well. So now, price pushes up, sweeps liquidity. This could have been a sell here, right? From here.
Yeah.
But like I said, I didn't want to sell from this level because I just wanted, because you got an entry model, right? Here.
Yeah.
And you're expecting price to pull back down so you can buy. But this would have been a hedge you could take if you wanted. If it would have, it might not have even tagged you, or you could have done an RBR here. Okay, so you could have been in here with, let's say, and this is money management, right? You can take a scalp, or not scalp, you can take an entry as a hedge, like a hedge for a sell to buy, right? You could sell into a buy. So you could sell with, like, I don't know, 0.1% risk. And then the money that this is making here before you buy is going to cover. You have this to break even. And then if you take a loss on this and price decides to continue down, then you're still in this trade and you're not going to take any losses because this is making you money. And you can keep that running then until you take the next buy. You with me?
Yeah.
Yeah. So
Yep.
because price might want to come down here, sweep this and come back down here and then go. Okay. So you just have to manage your trades in that way. Okay. So let's take a look at this now. We're in our zone here now, our trading zone. Okay. And price then pushes down. Let's have a look on what I saw, 15 seconds. Okay, again, this is deep, advanced candle study, right? So we know on the 1 minute time frame that we've gone and we've broken this. Now price is coming down. We've got this as our first POI, which is in discount of this move up. Okay, so it's pulled down into a discount. We've got these wicks to take out as a inducement, if you like. That's liquidity. And then we take a look at what does price do when it gets in here, and we want to find our entry. Now, this was a valid trade from here. If you wanted to cover the lows, this was valid, right? As a first entry, if you wanted to take that. So that would have been valid. Now, studying the price, how price is when it gets into an area is so important. And like I say, we'll go on to this in the next session along with scaling in, okay? Now let's say we were in from here and then price comes down and we can see that price printed these wicks here. Okay, now we're thinking price is going to push up, right? It doesn't. It comes down and takes the liquidity of these wicks. Now there's two things that can happen now. Your trade idea is either going to be wrong and price wants to come down deeper, maybe to here, which is fine. Or they push price above these wicks. So what you've got to think here now, someone's tried to push price up here, right? Aggressively, because we know how much money you need to push price up and leave wicks and whatever. You're talking about billions. Price didn't continue down. So this POI, it held, right? This remember was a wick. It was kind of like this. Okay, so this is held. Now these wicks get taken out. Price didn't push down, but instead, right, someone's come in and pushed price above. So it's broken strong above. Now what we can look at is now this push up is basically a nice push because it's broken these levels.
Yep.
Okay, and then so you could use this level now as a high probability zone for price to react from. So this could be like your second, or here you could even be aggressive and go there, or you can wait for something better. This comes down to patience, and you've got now this zone, and then price continues up. Okay. Basically, I think my entry was I entered from here. I can't remember, but yeah, but that's just basically candle study, deep candle study, and like I said, this is we'll come into this again, and you'll see it all the time. You always want to focus on strong candles, right? Look at these strong candles pushing down. Okay, and then price comes up, breaks them there, pushes, and then breaks them all. So it's basically the same stuff here. It breaks all of this that you were thinking, shit, it's going to come down. It's taking that wick, it's going to keep coming down. No, it doesn't. Just stay focused, see what's happening. And they want to push it up. Okay, and the same here. They break here, push back down, and that's it. And this would have been your, oops, RBR. Might not have even got to the RBR point if you wanted to do the hedge on there. But again, right, if you're looking on 15 seconds and stuff, you have to not get carried away. I know there's a few guys in the group, they've been messaging me that have been using the seconds and they've been getting carried away and taking, too many trades and too many losses because they're just focusing on the seconds. So we don't want to just focus on the seconds. We only look at it when we get into our zones of interest that we want to trade from. But always remembering the higher time frame stuff and using them all as confluence. Yeah, look at that for a long, right? If you go in on that long, it just ran.
Yeah.
And that's on the 5-minute chart. So you think about it. If your entry is here, if your entry is there, 1 pip or whatever you want to use, 1.5, let's say 1.5, then we're expecting longs. See that already there. It's about 50. There's 50 there.
Yep.
And that's all because we're expecting longs, right? Because of where we are in the market, we were expecting longs. Okay.
Yep.
So even if you're risking 0.1% on things like this, you know, you're still going to make like huge money or huge profits. Okay, mate. I don't want to push on into too much. Like I'm starting to get into things I want to cover with you in other sessions, if I'm honest. So, so the main thing to summarize today is timing, right? So I want you to practice. I want you to set these up with your 30 minutes, 45 minutes, and the 1 hour, exactly like I've shown you. And then I want you to start dropping them onto your charts, marking your charts up with them just to practice. And then in moving forward next week, just keep doing it every day when you come to the charts, put them on, and then you can start monitoring yourself how price is when they get to these levels. And then also the overextended candles. Okay, when you see EU pushing and making these overextended candles, and if it happens to be in POIs or just sweeping liquidity, then just have a practice and have a little scalp and just see how you get on.
All right.
Okay, mate. I'm just going to stop the recording there.